Hey folks, welcome back to our channel. Have you ever wondered how some people accumulate wealth while others struggle to make ends meet? How can small investments magically turn into large sums over time? What if I told you that there is a secret that has the power to make you rich through the magic of compounding? Today, in this video, we're diving into one of the most powerful financial concepts that can help you become rich: compounding, also known as the eighth wonder of the world. Wow! It is a powerful tool that can set you on the path to financial freedom. The concept may be simple, but the results are truly astonishing. Let's uncover the tips, tricks, and strategies that will propel you towards a life of abundance and prosperity. Okay, let's get ready to learn what compounding is, how it works, how to harness the power of compounding and watch your wealth grow exponentially, and some practical steps you can take to leverage this financial phenomenon to build wealth. Stay tuned until the end, as I unveil the secrets that could change your financial future forever. And please don't forget to subscribe for more money management concepts and personal finance tips. You might have heard, money makes money. This is true. And the money that money makes more and more money. Getting confused, right? Let me explain how. Compound interest accelerates the growth of your savings and investments over time. Let us understand first. What is compounding? Compounding is the process where the value of an investment increases because the earnings on an investment, both capital gains and interest, earn interest as time passes. Compounding is a process in which your money earns interest on interest. It's like a snowball rolling down a hill, gathering snow, and growing bigger and stronger. With compound interest, you're not just earning interest on your principal balance, even your interest earns interest. Compound interest is when you add the earned interest to your principal balance, earning you even more interest and compounding your returns with the larger base. How does compounding work? Have you ever wondered how a small snowball can turn into a massive snow boulder as it rolls down the hill? The same principle applies to your finances through the concept of compounding. The power of compounding enables your savings to expand exponentially. Here's how it works. Let's say you have $1,000 in a savings account that earns 5% in annual interest. In year one, you'd earn $50, giving you a new balance of $1,050. In year two, you would earn 5% on the larger balance of $1,050, which is $52.50, giving you a new balance of $1,102.50 at the end of year two. This process continues, and due to the magic of compound interest, the growth of your investment will accelerate over time as you earn interest on an increasingly larger base. Now let's understand how it differs from simple interest. Simple interest is calculated only on the principal amount, whereas compound interest is calculated on the principal amount and also on the accumulated interest of previous periods. Simple interest offers horizontal growth, which may or may not even beat inflation. The key to compounding is time. Time significantly impacts compound interest calculations. The longer the investment period, the greater the impact of compounding. Time allows your initial investment and the accrued interest to generate additional returns, leading to exponential growth over the years. Now let's look into the major steps to harness the power of compounding. Step 1. Start early. The power of compounding thrives on time. The earlier you start investing, the more time your money has to grow. Even small amounts can grow substantially over a longer period. Start investing as early as possible. For example, let's compare two scenarios. Suppose you start investing $1,000 per year at the age of 25 and continue until you're 65, earning an average annual return of 7%. Your friend, on the other hand, decides to wait until they are 35 and then invests $1,000 per year until they're 65, also earning a 7% return. Who do you think will have more money in retirement? By the age of 65, you will have $94,653 and your friends will have $36,439. You will have significantly more money due to the extra 10 years of compounding. Starting late by 10 years costs your friend $58,214, or 61.5% less returns. Step 2. Be consistent. Make regular contributions to your investment accounts, whether it's monthly or annually. Set up automatic transfers to ensure consistency and avoid the temptation to spend the money. Step 3. Reinvest earnings. Instead of withdrawing your investment earnings, reinvest them to take full advantage of compounding. Reinvesting dividends and capital gains can significantly enhance your overall returns. Step 4. Diversify your investments. Diversifying your portfolio to balance risk and reward can stabilize returns and enhance compounding. Selecting investments with high growth potential can significantly boost the power of compounding. Stocks, bonds, mutual funds, and real estate are all options that can benefit from compounding. It is important to conduct thorough research and analysis to identify investments that align with one's risk tolerance and goals. Step 5. Be patient. Compounding is a marathon, not a sprint. Resist the urge to withdraw your investments early. It is crucial to remember that compounding is a long-term strategy, and patience and discipline are key to reaping its full rewards. Stay calm during market volatility. Understand that markets fluctuate. Staying invested during downturns can be beneficial in the long run. How do different compound interest rates affect the growth of your investments? Let's understand. The higher the rate of return, the more pronounced the effects of compounding. Research and consider investment options that offer competitive rates of return without excessive risk. Use online calculators to experiment with different amounts, interest rates, and periods to see potential growth. Explore apps and platforms that can help you automate and manage your investments. Remember that compounding is a gradual and steady process that can help you build wealth over time and achieve your financial objectives. Start your compounding journey today by making a small investment. Start early, be consistent, reinvest earnings, diversify, and be patient. Please like, share, and subscribe for more financial tips, and comment below with any questions or topics you'd like to see covered in future videos. Remember, the power of compounding can transform your financial future, so take action now and watch your wealth grow. Thank you for watching. This video is for informational purposes only and does not constitute financial advice. Always do your research and consult with a qualified financial advisor before making any investment decisions. Investing carries risks, including the potential loss of principal. The views expressed in this video are personal opinions and should not be taken as professional recommendations.